Welcome back, everyone. We are still here live in Dubai from TOKEN2049, and we have got the Wolf of all streets here with us today, Scott Melker. Welcome.
Thanks, guys. This is one of the coolest podcast setups I've definitely ever seen. It's not bad, is it? You should be DJing while we talk. I heard you're getting on there later.
Hopefully later.
Hopefully.
We'll see.
Oh, you got pull here, man. Come on.
How's it all going, Scott? When did you get to Dubai?
I got to Dubai 3 days ago, and I'm leaving today.
Yeah.
A really quick trip from the East Coast of the United States, but I find these conferences, you got to get in and out.
Yeah.
Or, you'll never make it home.
You'll never know. Yeah.
How are you finding the vibe out here, and what's your thoughts?
It's great. Actually, I used to say last year that the American conferences were like basically being at a mental hospital or at a funeral.
Yeah.
And then you would fly over to Asia, and it's like Coachella for crypto, and you forget that there's a world outside of the United States where we were getting attacked by regulators and legislators, and everybody hated us, and we were talking about SBF every day. And then, you go to TOKEN2049 in Singapore and Dubai, and it's like SBF doesn't even exist. So obviously that's changed.
Yeah.
Very different environment. So I think that the climate has warmed dramatically in the United States. But I've found over the past few years that getting out of the U.S. was the only way to really stay inspired and to feel the vibe of what's actually happening in this industry.
And obviously, can't not sort of talk about what's going on with this administration. What's your view in terms of where we're at with stuff? Obviously, we were all very sort of bullish on when Trump was first elected and what that meant for crypto. He's delivering on that, but there's a lot of other stuff going on. Where are you thinking, and what are you thinking on where this administration's at and what that means for crypto?
Not speaking politically and simply from the perspective of crypto, I think right now we're in this phase where we're obviously sort of inextricably tied to macro decisions, and markets move based on individual tweets. And I don't think we've ever seen an environment like that before. So that part I think is challenging. But when you zoom out, I could not be more bullish on the situation. Like I said, as an American who suffered through years of attacks and lack of clarity, even more than the attacks, I think that the administration has done everything they promised and more. And once again, I'm literally an unaffiliated voter. I'm a Bitcoiner because I don't want to think about the government. And now it's funny because every show I have to talk about the Trump administration and institutions and Wall Street and all the machine we were supposed to be raging against. So it's an interesting time. But I think that, listen, we've got executive orders on strategic Bitcoin reserves. We've got the SEC literally taking back every piece of enforcement action that they had against the industry for years. We have pro-Bitcoiners, not only at the CFTC and SEC and the banking regulators, but also RFK at Human Health Services, Tulsi Gabbard. I mean, literally like across the administration, Everybody's a pro-Bitcoiner. And that's because it's actually the technocrats that won the election. And the crypto industry is actually what won the election more than politics, something people don't really talk about.
That was a smart move, him getting in front of that crowd and saying, I'm the crypto president, right? I mean,
that move, and then the money that came with it. You could make the argument that Brian Armstrong and Coinbase and Fairshake are really the ones that pushed this election forward. And so now he's delivering on that promise.
And it's a very smart political move, but what's with the Trump coin launch and like that pump and dump, right? I mean,
that's the bad side.
That was weird. That was weird to me that he would expose his reputation in that way and let that happen, right?
First, I would argue that beyond maybe being told about it afterwards, he probably didn't even know. I think it's his sons and the people that he trusts and advises. Horrible move for the optics of the industry. When I talk to my Wall Street friends, I went to the University of Pennsylvania in the 90s. Like, everybody became a banker, right? So all my friends and one have had at least a foray in Wall Street, right? And so I talk to them about this all the time. And it felt like we were at a moment where I'd finally convinced them that this wasn't a scam.
Yeah.
And then Trump token and the Bybit hack and a few things that made it onto their radar have made that a more challenging argument. I think the Trump token was a horrid idea, frankly, a gratuitous cash grab, and perfectly timed between Gensler leaving the SEC that weekend and him going into the presidency 2 days later. But if we want to take an optimistic view of it, Trump has launched NFTs. Trump's launched a meme coin. They have World Liberty Financial, which is heavily investing in the space. The sons are now participating in a mining company. They're about to launch ETFs. If you think about your crypto journey, your average person, they've tried every kind of angle of it, and all the speculative sides and all the creative sides and the building sides. And whether it's him or the people around him, they're putting their fingers on literally every part of this industry and actually trying it. So I think you have to give a lot of credit there. I just wish a meme coin didn't go to 75, billion market cap or whatever it was 2 days before the election on a Friday night at 9:00 p.m. I think that was poorly timed and not ideal. And I think that really actually put in a ceiling for the market for quite a while. And if the Trump meme coin gets to a certain level, nothing else is surpassing that level for a very long time, right?
And in the recent kind of sell-off in stocks, have you been surprised the resilience that Bitcoin showed? The way it's kind of started to decouple, latch onto the gold narrative? Because it's a bit of a shapeshifter, Bitcoin. Sometimes it's a high beta risk asset. Sometimes it's an alternative to the financial system. Sometimes it's digital gold. Like, did that surprise you? Or is it kind of now the new role that it's going to have for a while? Just as a persistent, do you think that breaking correlation is persistent?
So I'll take the other side of that, which is that it's never been correlated, and it takes random walks with other assets at certain times so that people can say that it's correlated, but it certainly does not trade like gold, and it certainly does not trade like risked assets, except for some of the time. So to me, it's actually, from a narrative perspective, digital gold makes a ton of sense because the value or the properties are a superior version of gold. We all know, like fractional division, easy to transport, easier to store. Like, good luck fleeing your country with your bag of gold on your back, right? Yeah. I think everybody understands that part of the digital gold. Yeah. But where they get lost is then expecting it to follow gold's price, which it's not going to, right? It trades its own market. It's exponentially smaller at this point, and I think smaller activity can move the Bitcoin market in a way that doesn't happen elsewhere. Now, as we've gotten ETFs and BlackRock that's involved in all these people, you're going to see certain behaviors. 9:30 a.m. every day, Bitcoin correlates to the stock market for an hour. Like, it happens. So I can't argue that. But if you look at the 10-year correlation, looking at -1 to +1, Bitcoin's at like a 0.015. It's just not a correlated asset if you zoom out for any amount of time. So I don't think that it surprises me at all, because when I look at it on higher time frames, it just doesn't look that correlated. I think you can make an argument that maybe it's correlated to liquidity, which is more correlated to those other markets, so they're somewhat correlated to the same things. But I think Bitcoin, the beauty of it is that it sort of trades on its own, and that is the holy grail of a portfolio manager's. Right? If you can find something you can put 5% in that has idiosyncratic risk and is completely uncorrelated to other assets, even if it goes down, you want that in your portfolio, because it raises your Sharpe ratio and gives you a chance to have something go up when everything's going down or go down when everything's going up.
Are you a believer in the 4-year cycle on Bitcoin with the halving cycle? And do you think the kind of introduction of a new institutional client base distorts that cycle somewhat?
I was a big fan of the belief in the 4-year cycle, but I always said, if it ain't broke, don't try to fix it. Now it's broke. So I was like, prove me the 4-year cycle exists until I'm proven wrong. Now I don't think the crypto 4-year cycle works. I should be specific. Maybe we'll see Bitcoin. I think it won't have the 80% drawdowns anymore. It will still have massive drawdowns and massive volatility. But I don't think we'll have predictable peaks and valleys almost to the month every 4 years like we did in the past, largely because of the institutional bid, as you kind of mentioned, but also the halving is a narrative at this point more than it is a fundamental event. The Bitcoin is such a big market. There's so much more going on that the supply reduction is a rounding error, right? Yeah. It was very easy to say in the early 2010s that, well, if new supply cuts in half and demand stays the same, of course price can go up, but the demand matched the limited supply at that point, right? We have so much demand now for the asset class that I don't think that cycle, for better or for worse, is going to be the same. But the key where I was really wrong about the 4-year cycle is that I believed that altcoins would have their move, right? If this was a true 4-year cycle, the last 3 months, Bitcoin would have gone to 109. First of all, it also put in an all-time high with the ETFs much earlier than it should have if you believed in the cycle, way too early. But here we are, a year after the halving. Altcoins should have been going nuts. If Bitcoin made a new all-time high and then slowly consolidated down, that's when the degenerates are supposed to, go into the washing machine and get impatient and move their Bitcoin to an altcoin to get back to Bitcoin. And that, there's the meme coin casino on one side where those guys are playing, and everything else, it's a barbell. You got the meme coin degenerates, which is like whoever is still somehow alive after getting washed in the crypto cycle for the last 10 years. And then you have the institutional bid on Bitcoin, but Bitcoin buyers used to trickle down. You used to get bored of Bitcoin and you had it on Binance and you'd go find the shiny thing. If you have IBIT, the BlackRock ETF sitting in your Schwab account, you can't just decide to go buy Solana with that. You'll be able to buy a Solana ETF soon. But you certainly can't go buy the new meme coin, the new shiny thing. You can't go buy Trump.
Yeah.
Right? And so the market does not move in the same ways. And to that end, there's just too much supply in the middle of that barbell with all of these tokens. It's a sad kind of moment for me, to be honest, because in previous cycles, you could have the cognitive dissonance that these things were going up because people believed in them fundamentally or there was some real utility. And now you see that was just speculators and that's where they could speculate. And now they've found a faster and better casino, which like literally the odds in that casino would make the mafia blush. The mafia could open a casino in Vegas and like a sub 51% make billions of dollars. The house has a 99% advantage in the meme coin casino, and people are still
doing
messing around in there. I think it's so. Like I said, I think everything's been exceptionally good for Bitcoin because that has the stamp of approval, the clarity, and I'm waiting for the next narrative that can kind of catch a bid on all those things.
I actually saw you pull out something bullish on ETH yesterday.
Sure.
Bullish?
Yeah.
Is that from just a technical panel, or is it just that weird? Yeah.
Literally every perspective.
Now in the end of the year, you think it has a run?
Yes, but I've been wrong before. I would have said that probably $1,000 ago, also. Right. So, I love counter trading sentiment. Doesn't always work, but when I start hearing about things going to zero and dead and never coming back and replaced by such and such, that's my spidey senses tingling that this is probably a buy. I remember the day that Elon Musk went on Joe Rogan and smoked weed, and he's not a serious person. Tesla's going to zero. Nobody's going to buy electric cars. Tesla went to like 180, and I backed up the entire truck and bought Tesla. Went into the thousands. Obviously, it was like the dead bottom was in the 170s, somewhere right there. That's how ETH feels to me right now. BlackRock is literally tokenizing treasuries by the billions on Ethereum, and people are telling me it's dead.
Yeah.
That's going to become interesting to people at some point. Like I said, I could be wrong. And then if you want to talk from a technical perspective, it's the most oversold it's been. You've got bullish divergence with RSI oversold on all high time frames for those who are chart nerds. It hit literally the highs from a full cycle ago. Right, it went all the way down to that 1,400 high from 2018, 2 cycles ago. Right, so so from a technicals perspective, it's just incredibly beat down. I love that. It just seems like an opportunity.
Scott, we appreciate you coming on, man. Spending a little bit of time with us.
Thank you guys. It's awesome.
Yeah, no, thank you.
Now let's jump in the pool.
Yeah, let's jump in the pool.
Do it. All right, take care.
Cool.
Thanks, guys.
Thank you guys.
Scott, that was mate.
Cheers, mate.
That's all great.